There's a moment in every storm where everything goes quiet. There's no thunder, no lightning, just still air. And if you're not paying attention, you think it's over. That's the market right now. Rates haven't moved much. Jobs still look okay. Headlines, well, they seem pretty calm. But I'm telling you, this is the moment before it moves. Hey, I'm Ramin, and this is Real Talk. And in this episode, I'm going to walk you through what just happened in April. Not the headlines, but the actual signals. Why the job market is softer than it looks, why the housing market is still climbing, and why that's a bigger deal than most people realize, and how the mortgage rate environment is flashing a pattern I haven't seen in over a year. If you're a buyer, a seller, or an investor, or just someone trying to make a smart move before things shift, stick around, because we're not waiting for permission anymore. Well, let's start here. 177,000 jobs were added in April. Sounds strong, right? Well, let me ask you something. If I told you they revised down January, February, and March by 124,000 jobs total, would you still feel confident? Well, that's what happened. 3 straight months, quiet downward revisions. No fanfare, just buried in the footnotes. Meanwhile, people out of work, well, they're staying out longer. 23.2 weeks on average. That's the highest it's been in almost a year. But here's the kicker. Small businesses supposedly added about 400,000 jobs in April, but ADP, the payroll company, says it was only 11,000. That's not rounding error, that's a disconnect. And when numbers don't match, well, markets will hesitate. While everyone was watching jobs and inflation, home prices quietly did something powerful. Case-Shiller said national home prices rose 3.9% year over year. FHFA said 3.99. But in big cities, 4.5, 5.2, even 6% like here in the Bay Area. In other words, despite high rates, affordability concerns, and media fear, prices didn't drop. Why? Because demand didn't die. It just delayed. And now that the demand is creeping back in, especially with the belief that rates might drop later this year, well, buyers, they're moving again. Even if you're not buying right now, this matters. Because if home prices stay strong in a high rate environment, imagine what happens if rates actually fall. Let me explain something simply. Mortgage rates don't move because the Fed raises or lowers the Fed funds rate. They move based on what bond markets expect the Fed will do. And right now, mortgage-backed securities, the bond pool behind your 30-year loan, well, they're slipping. They dropped below key support levels traders use to judge momentum. You don't need to be a hard trader to get this. Think of it like this. You're trying to climb stairs. If the stairs beneath you break, that's your support. And when it cracks, you fall down to the next one. Mortgage bonds are falling, which means mortgage rates are trying to climb, but they're struggling. That usually means a turning point is near. Not bad, not today, but soon. Core PCE, or the Fed's favorite inflation measure, is now at 2.6%. That's good. The headline number is at 2.3%. That's also good. But 18% of core PCE is shelter. And that part, well, that's still sticky. The real-time rental data from sites like Apartment Lists say rent growth has slowed dramatically. But the Fed's models, well, they're lagging. So they're playing catch up. And that rent data finally gets priced into inflation reports, well, that's when we could see real rate relief. Not because the Fed says so, but because the market will move ahead of them. And that's the move you need to catch. You don't need to predict the Fed. You just need to understand the tempo. April was not a month of loud moves. It was a month of setup. Home prices still showed strength. Rates, they showed stress. And the job market, well, it simply showed cracks, even when smiling for the camera. If you're not planning to buy, now is the time to prep your file. Get the strategy and structure to win. If rates drop, you're ahead. If they don't, well, you're still ready and not screaming with everyone else. This isn't about panic, it's about timing. And right now, the music just changed tempo. I called this week's newsletter Life is Strange before the rates break for a reason. Because everything looks fine until it's not. And those who wait for the storm to hit are always the last to move. But those who feel the wind shift, well, they win. If you want to read the full breakdown, I've got it linked below. Charts, strategies, signals, and yes, even threw in a strawberry muffin recipe to keep it grounded. Because in a chaotic world, one thing is always true. Muffins help. This is Real Talk. Let's move smart.